Today we are going to talk about the technology within the financial world. And before we start, I'm going to ask you for a little favor. Try to recall how your first piggy bank actually looked like. Was it probably a pig, or maybe it was a dog or something else? Just hold that memory, and I promise that we will get back to it later during our today's webinar. First, a few words about myself. As Anna said, I'm CFA charter holder and I hold this certificate since 2018. And here's the moment I'm proud to be elected CFA Society Ukraine board member for the upcoming 2 years. Here, a deep moment of gratitude to those CFA Society Ukraine members who actually voted. Really appreciate that. Hope to meet your expectations in the nearest future. And when I was putting this information on slide, I realized that it actually took me 5 years from thinking of passing the CFA until getting to the board. And few words about my work experience. I started working for EY, a big four company. And then I was working for largest IT companies operating in Ukraine, namely SoftServe and Ciklum. Today, we will talk briefly about customer adoption trends in financial technology area to have a feeling of key factors that drive the industry. Then I would like to share with you several case studies. Of course, all the juicy parts are always under NDA, but at least I will try to reveal a curtain for you. And a short disclaimer, we want to talk about the blockchain today. And finally, a few words about how which values companies are receiving via implementing technology in their business, and which are their motives actually. During each section, I really encourage you to post ongoing questions if you have any to the Zoom chat. But of course, we will do the interim breaks, and we will reserve some time in the end for a final Q&A session to have it verbally. So let's get started. First of all, I would like to talk to you today about actually customer demands, because they are the ones who are driving the sector. They are the ones who define how the sector should be and how it should correspond to the current financial state. There is one interesting survey conducted by consulting company EY, and according to it, adoption of FinTech has really increased recently. And in consumers market now, adoption rate is equal to 64%, compared just to 16% in 2015. It means that 64% of consumers now use at least one FinTech service globally. And awareness about FinTech services right now globally is very, very high. And here the obvious outlier is China, because in China the adoption rate is over 95%. So there people use FinTech like every day, everywhere, and almost in daily life. And you will probably wonder why actually these consumers pick the FinTech services compared to the traditional financial services. The key factors here for them would be attractive rates. Before, what is interesting that the top reason for consumers was actually easy access, easy setup of the account, and now it's no longer the main reason. So now everybody knows how to do the user-friendly access, how to set up easily. So here, cost is the matter. What's more interesting here that currently consumers are much more likely to consider non-financial services when they are thinking about traditional business. So whenever we say about the payments or retail or even insurance, people are more likely to think of not just going to the bank, but go rather online and find the service in some informational form. And what's additional here, that they are now more likely to will in the data with other organizations. Previously in 2015, in 2017, trust was really a matter for consumers market when we are talking about fintech. No one wanted to share their bank accounts data with other organizations, and now it's a much higher rate, and it means that consumers likely to actually be open to any new trends, any new technologies within the market. Here we are talking about actually consumers market, so rather about the individuals, but there is one more segment. Those are small, medium enterprises. For them, the adoption rate is relatively low, but for them, the methodology is a little bit different. 25% of adoption rate for companies means that actually only 1/4 of them use fintech services across all financial sectors, and all think of insurance, finance, budgeting, and planning. Here also, China is an obvious outlier. For China, here is something about like 60%, because in China, fintech platforms are very, very popular and persuasive. For companies, the reasoning is a little bit different compared to consumers, because for them, range of functionality and feature is the top reason to use a fintech service. And it is not about just cost, it's about the combination of the functions available. And this reason is followed then by availability, actually, of functions. So after thinking of having wide range of functions, the next thing that companies are thinking of is the availability 24 hours per day and 7 days per week. The motivation is different for companies compared to consumers, because they are mostly restricted with the regulatory requirements, because when we are talking about insurance, about the bookkeeping tools, about tax purposes, there is just no way to do them, to live without the technology in these areas for companies. So that's why they prefer to find a technological solution to cover these legal requirements. And here, one more point about the trust. Companies now are much likely to share the data with fintech companies. And in this reality, all fintech vendors become really like a trusted vendors for companies, because otherwise they won't survive in the reality of new regulatory requirements and fast pace of fintech services. So overall, if we want to summarize the trends currently in the market, consumers are very demanding, and they expect that market should react correspondingly and should meet their high expectations and should satisfy their attractive rates and range functionality top reasons. So having all these demands in place, market actually the only way to respond properly is to have so-called mixed structure. Here we're saying that there is first segment of fintechs, which are referred as new entrants, startups, or attackers. They are actually going into financial services using new technologies, new approaches. They are coming from financial origin, but operating at a low scale. The typical examples here, I don't know whether you are really aware with fintech companies, but just a source of inspiration, you could then Google and see what they are doing. But the typical examples are Sophie, TransferWise, and Lending Club. So the idea is to mimic traditional business model, and for them, since are operating at low scale and actually try to fit the niche market, for them, customer acquisition cost is the key to get the share in the market. There is one more segment, which is also operating at low scale, but is more technological one. Those are so-called infrastructure providers. Those are companies who try to help financial institutions to become more digital, to become more modern when dealing with the customers. Typical examples here listed are FinTech, Marqeta, and Onfido. They are actually trying to be in a partnership with the traditional financial companies and to provide all the technical infrastructure. The third segment are the companies from financial origin, but operating at the high scale. Here we are thinking about very, very traditional financial institutions, which make really huge investments in technology to live their game. And few examples here are very well-known Wells Fargo and Piggy. For them, investing into technology is like a matter of competitive advantage. So to win on the market between Wells Fargo and other competitors, they use technology as a leverage on the market. And the last but not least segment are actually large technology ecosystems which use financial service to strengthen relationship with users. And don't be surprised to see here Apple, because apart from Apple, we have here Tencent and Ant Financial, and Ant Financial, those are a little bit like a part of Alibaba Corporation. Those are companies who have really huge customers base, and they use it as the platform to incorporate customer experience in one place and to see like a whole completed journey. And they focus maybe not leaving the application, not leaving the ecosystem, and to cover everything that customers require from financial perspective in one application. So it may be something not just about the payments, but also about the insurance, about saving accounts, and so on and so forth, depending on the user's expectations. And for this fourth segment, customer acquisition cost is the major advantage compared to those who are actually dealing with this low-scale markets. Having the demands and market structure in place, here comes the next question. In which sector technology is adopted the most? And at this moment, I would like actually you to participate in answering this question. And we will actually launch the poll where you could actually give your vote and say, in your opinion, in which categories of financial industry FinTech service is used the most. If you don't see the poll, oh, I see already one vote. You've asked actually to select exactly 3 options in your opinion where technology is adopted the most. And we have an obvious winner of money transfer and payments. The second place is saving and investments. And the third place is borrowing. And fourth and fifth place are budgeting and financial planning and insurance. It is now shared in the Zoom chat, you can check. But let's see then what is the right answer. And we'll check how well do you know the FinTech. So in general, we have a ranking for 5th places and the historical trends. So congratulations to everyone who voted for money transfer and payments, because really it is the most popular area of finance where technology is adopted at most. Having 75% here as the adoption rate means that 75% of consumers use at least one service within money transfer and payments. And here we are talking about just peer-to-peer payments, in-store purchases, something like that. And yeah, you know already that China is an outlier here, but even globally, it is like one of the most popular sectors. But the second place, and we had, according to our poll, it was like on the 4th and 5th place, but this is the insurance. Insurance demonstrates very drastic growth from 2015, and now only almost 50% of consumers adopt the insurance. Here is the important thing that actually non-financial companies, they help people to adopt technology in insurance. They feed the smart devices to link them with insurance. For example, applications that count your calories and then give you the discount on health insurance. Those are also telematics, which count how well you're driving, and that's the risk of your car insurance. And almost the most popular products globally in insurance would be sites for comparison of actual premium and understanding which insurance company is the better for you. Though there is a million of applications to do that, but the funnier one are those related to the applications on your health and your physical activity for health insurance. And those are relatively high, actually, figures for adoptions, but that's not equal to the statement that market is already too saturated and there is no potential of growth for services. Because we have their saving and investments, which was on our on our second place according to the poll, and we have budgeting and financial planning, and we have borrowing. Three of them are about 30% of adoption, and the potential here for them is reaching to the sectors where the adoption is still very low. Those are women, those are people without the higher education, those are people living in rural areas, and in those segments, adoption is still globally very low. And actually, at this point, I would like to switch to the case studies from actually second and third place. It will be insurance and trading, namely because for money transfer and payments we had the webinar recently. But before we do that, I will stop for 1 minute just to check whether you have any ongoing questions, or we could proceed. So. We'll have 1-2 minutes probably if you have questions, if you already posted. If you did not, you have a chance to do that right now verbally. Yeah, we have interesting stats. Thank you. Thank you, Roman. Okay, then I treat the absence of questions as the sign that we can proceed. But hope at least that you're enjoying. So the first case study which I would like to share with you. Oh, I'm sorry, someone posted. Can you give a general comment and definition of FinTech? Oh yeah, that's actually an interesting question because in general, when people say about FinTech, they always think something about cryptocurrency, blockchain, and very super sophisticated algorithms. But in reality, what we are referring here to and what is this adoption service are referring to. So this is like a combination. This is always a partnership between traditional financial business model with using any new technology to leverage the business. Yeah, so the case study number 1, which I would like to talk to you today, would be about the insurance, and namely auto insurance, because it's actually dealing with the claims for your car. Probably is the most popular type of insurance which you have the experience in your life, and that it will be probably closer to the audience. When we are thinking about our typical story with dealing with the claims insurance, we somehow get into a car crash. Of course, it's not our fault, never ever. But the fact is the fact, you have your car damaged, and then you call to the insurance company to have the damaged accessor driving on his way. So you wait for him, so he drives to you, and then he assesses your damage. And apart from waiting for the police, you're still waiting for this person to be in place and said that, yeah, okay, I will document your damage. Then you think that, okay, this is done, but no. Insurance company then starts the process of settling up the claim and filling all the documents which you need to sign before you finally actually receive the sum to your bank account. this sounds like very, very typical history of getting into a crash. And what industry is trying to achieve, insurance companies really strive to have customer journey to be end-to-end digital, and that will like make the whole experience working with the insurance company for people a little bit different. So on the first step of this ideal digital journey comes digital claims prevention. And here we are saying about the prediction of high-risk situations, such as telematics, such as something like your application on the phone, which will say where to park, where to ride safer, something like that. On the second place of this journey comes digital first notification of loss, when we are saying that using any technology like your phone, your laptop, you will be able to claim to the insurance company the fact via chatbot, via some voice assistant, or just dropping a note. And actually then comes automated claims management, which allows to control how the claims are processed, that they are not manually processed, and they have the algorithm of grouping the claims on the first place and having them the severity or urgency at the first place. And then we have digital loss assessment and repair, which assumes that the technology should help insurance company to have automated damage evaluation and to have something that eliminates human error and hires the process automation time. And finally, happy step of this journey is automated settlement, which assumes that all the invoices and all the account payments should go without actually signing the document in a paper form, without getting to the insurance company, and should be 100% automatic. So this is the ideal world of insurance company globally. This is the ideal journey which they are targeting right now. And here comes the part about how it comes to reality. I will tell you about one case of the partnership from the experience of Ciklum. Ciklum collaborated with European Mutual Alliance of Insurance Companies, which is called Europco. Europco has over 43 million customers, and having all these customers in place, it's like a great potential to minimize the operating costs and to minimize the human involvement and manual involvement, and to make the claims processing much more digital. What was the essence of the collaboration was to have damage evaluation process very automated. So overall, the journey is like that. Deep learning mechanism should help to implement the following steps. User should upload the image of damaged car. So you had your smartphone, you've just taken a picture of the car, you upload the image, then system detects which car part it is, then it identifies what type of this damage is, so it may be dent or scratch, how severe it is, and as the final step, you receive an estimated repair cost. So this is the real story. And this journey sounds like much more entertaining than waiting for value assessor from insurance company, which should go and do it manually. And from customer perspective, it's like much more entertaining, much more faster. And from the insurance company perspective, it eliminates the need of intervention, and it eliminates the risk of human error on this step. The second case study, which I would like to share with you today, is about trading. And you see here the famous slogan from Nokia. And no, I wouldn't tell you a story how Nokia became a world-known trader. The purpose of this case study is to show how actually, due to technology, trading became much more social. Let's just take a step aside and try to recall how frequent do you use recommendation systems in your daily life, because we really use Goodreads to understand which books to read. We ask for where to eat. We ask Netflix which TV series to see today. We use TripAdvisor to answer the question where we need to go on the vacation. And without Google, we simply just cannot even select a place where to have a lunch if we are in a familiar country or city. And what if this recommendation is also applicable to the trading? There is one company, it is also like a partner of Ciklum, is eToro, and they've implemented the idea of social trading. And social trading is like a norm right now in the trading world. So whenever you think about social network, everything eToro has as well, even though it is a trading platform. So whatever you think of when you think about a social network, it's like newsfeed, popular traders to follow, it is there. And the essence of this application is actually to allow users to copy what others do. And the primary advantage of this technology that it assumes that little or no knowledge about financial markets is required to go and get trading actually in eToro. And why is it different from the traditional business model? Why I think this is the case of how technology helps to introduce new ways of working within the finance is because in this application, you actually follow the people who really invest their own money in trading. And in traditional fund manager perspective, trading before, in 90s, in the beginning of 21st century, was all about the experts who advise the customers where to allocate the costs, but they never put their own money at risk. And here within the social trading, we're saying that people now should follow and should copy the strategies from the investors who are actually at risk. And this is the very simple idea, which was like on the surface. And before, trading was treated as you're supposed to be financial expert to start trading. But now having social network for trading available, you can just subscribe to the most educated traders and copy their strategy and see what they have achieved. And if you like the achievements, you could follow, and have normal social network in place. Third section, which I wanted to talk to you about, is actually what is the main motive for organizations to implement, to take the technology as the leverage and to be more modern and to go away from traditional banking and traditional financial business models. We all know that the simplest answer will be cost reduction, but apart from just cost reduction, there is a very blurred segmentation into four reasons. First one is dealing with the cost reduction and known data is like operation efficiency. The whole purpose for doing some technology improvements, for being more digital for companies here, would be to have an ability to produce easier answers or some processes to improve the speed and actually have internal processes more accurate. And examples of those would be customer service automation or fraud detection, which is quite popular in the banking and insurance industries. The second motive would be still operations, still cost reductions, but here we are dealing with the unknown. And it means that we need to discover something. And typical examples will be here process mining and scenario playing. The whole idea of this way of thinking for the company would be to improve the speed and accuracy of internal processes again, but having the novel answers. So revealing the insights which they didn't know before they've implemented the algorithm or the technology to reveal what should be improved within their process. And the second, let's say, perspective is not to look in just operations, but focus on the customers. And this will allow to increase revenues for companies. Here we're saying about something like recommendation systems or pricing automation, because it allows to produce the answers or actions which are serving customer conversion and loyalty for the company. And here, similar to the operation, we have still customer focus, but with the unknown answers, and still ability to discover. Here we're talking about something like a market segmentations, when traditional financial companies are looking for new segments to have the niche products and to have an answer how they should target the consumers. And you will probably say that this is a very generic example, so that's why I've found the real one. The real story is the well-known super large bank called JP Morgan. They've implemented machine learning system Coin autonomously, and this one reviews and interprets commercial loan agreements. And when we are talking about the value for them, value is always a measurable thing. They counted that via implementation of one algorithm, which helps people to interpret commercial agreements, they saved 360,000 hours of people's work. And it was an AI algorithm, and instead of having all of the people reviewing the agreements, they've saved years of their work. And here comes the prime time of Piggy bank. You remember I've asked you to just recall how yours looked like. I don't know whether everybody sees me on the screen or not. I had the ladybird. This is my ladybird. Actually, we all know that the piggy bank is like most traditional bank account which you may ever imagine. And what if I tell you that even piggy bank could be digital, and even piggy bank may be very technological? Here comes the real story about piggy bank, which comes to cloud. The idea of having piggy bank in cloud was just to have the physical ability to interact with the piggy bank, but it will be 100% cashless and connected to the mobile application. And this is the real example of prototype developed by Ciklum team for the purpose of having something for children to have the educational purpose and to learn them how to save money in the era where we will have no cash, when everything will be on the mobile applications. And it's actually connected to the applications which track the accounts. And the idea is like that: once the child have an achievement, parents or I don't know, grandmoms or friends could put the money on the account, and the piggy bank will be lighting up, and you may interact with it, touch it. Maybe it uses some sounds, pleasant sounds, but in general there are no coins, cashless area of piggy banks. So I don't know, we grew up in the reality when we had very traditional piggy banks with cash and coins. And our children and modern children will probably grow in the age where we'll have this kind of piggy banks. And on this futuristic note, I would like to thank you for your attention. And I promise you that we will reserve something like 15 or 20 minutes for final questions. So here you have the time to have it either in verbal form or post it to the Q&A section. What do you think about Ukraine? Investment and saving apps for middle-class Ukrainian with the access to the worldwide financial instruments. Too much regulations around that right now. Only sending the money abroad allows to purchase ETFs and other industries legally. Yeah, it is the funny part about the regulation in Ukraine, because in Ukraine we've had recently this law in April, yeah, which assumes that now everything should come through the technology which we don't have in place. And actually about investment and saving apps for Ukraine. I don't know about your experience, but all people who I know, they do these tweaks, they use the applications which allow you to trade everything, but having the accounts in different countries, because our legislation doesn't prohibit you to have the accounts in the different countries. So you're still allowed to do that legally. And actually, what is saving apps? And so now I don't know about your experience, but based on my experience, nobody feels the restrictions having the accounts in different countries.
So we want to thank you very much for very interactive presentation. Thank you for those who were active during the chat and answering all the questions and putting the question on the chat. Thank you so much, and see you later on our later webinars next weeks and even then. So thank you so much, Nataliia, and thank you so much for everyone who joined us today. Thank you.